Yo, what's up you guys? Welcome back to another video. Today I want to show you guys a 5-minute gold strategy that you can apply in the market for those that loves to scalp. Without any further ado, let's jump straight into it. If you followed the gold breakdown, you have probably got in there zero drawdown and ride that wave to the downside based on the breakdown that I had done. So if you got in there, well done. Guys, please make sure that you do follow these breakdowns. Most of the time they are so accurate. I was so intrigued by a video that I watched by the FX coach because apparently they are trending. I saw a video of them where it says that forex trading for beginners, and I was like, wow, you guys, provide actual content. And then I took the liberty to open the video, and I must say I was so disappointed in the misleading content. The fact that the first 5 minutes of that 24-minute video was basically them showing a trade that they were taking. That is it. And then for the rest of the video, they were selling FTC. They were just selling prop firms and selling their dreams and selling los die goed. Yes, julle maak my al. In any case, guys, we are here for the gold strategy, and that is exactly what we are going to discuss in today's videos. Now, there's obviously a couple of rules that applies with this strategy, and then rule number one is very simple. Identify SNR, so support and resistant levels on 15-minute, and number two, wait for price to develop on the 5-minute time frame. The entry we're also going to take on the 5-minute time frame, and then we're also going to talk about the stop losses and take profits and all of that stuff. Let me copy this and then go down to the 15 minutes just so it doesn't disappear. Exactly what I was trying to avoid. And we're gonna basically just we're gonna utilize this part of the chart over here, and we're gonna talk about just that part, but I don't need to clear out. I want to show you guys exactly how you need to do this. Right now, there's obviously two ways I can do this. I can do it with just a simple explanation on the side, or I can show you guys in a live market, and that is exactly what we are going to be looking at doing. So we obviously know, as we have spoken before, the first step, as I said before, I don't know what happened to my thing that I drew here. Okay, look, let me just do this, copy it like this rather. Cut, okay, delete, and then drop back down on the 50-minute time frame, and we're going to go through these rules. Right, I'm going to add more as we go along, but it is important that you just follow this. It's very simple, it's very easy to use, but also just use your own initiative. Make sure you calculate your risk before you take a trade. The recommended risk the recommended trade, the amount to risk on gold is always half a percentage and not a full percentage for this also. So we are going to speak about the first thing that comes to mind, right? The first thing you need to do is identify support and resistance levels on the 15-minute time frame, which is a good reference to the video that I've made before. And like I always say that these structural levels are created in two ways, right? You can either have the market printing a high and another high, that will be resistance, and that would be support, or you can have the market create resistance, support, and then a break of resistance becomes support. So break of resistance becomes support, and the break of support becomes resistance. So you always want to identify these levels. Now that's basically what we're going to do with this chart first. The first thing we're going to do is identify support and resistance levels in the market, and this would be a good exercise for new traders to do as well, because this is the key stepping stone that you need in the market also. Now if we go back, like I said, we're going to start with this side of the chart, right? If I go back over here, and I'm going to speak to you guys through this obviously as we move along. Here we had support, it got broken, it became resistance, and here the market tested resistance once again, right? So there we've got our first level of resistance. So I'm not going to go through these noises that we have in the middle, but I just want to show you guys exactly what had happened. Here we have once again the same thing that we have there. here we have a market that printed support. The market broke below that. All of that support became resistance. The market tested it once, twice, and that was about it. Let's keep the charts clean. That is the second one. And then we are going to also, remember I'm doing all of this live, so you know, I pre-planned it. So just make sure, like if I do take a while, it is because I want to make sure I do draw these levels for you guys correctly. So here we've got an important level as well. We can see here the market printed support. Then we had support that got broken there, and then that support became resistance. Okay, now we're gonna do that, and then we're gonna go over here. This is going to be a long shot to say that this was also support, and the market then because this wick is a indication of support, because that is a level where the price had visited once. The market broke below support, tested it as resistance once, twice, and you could have used that also with what I'm about to show you, right? But again, for this exercise, I'm not going to use that. I'm just going to go and we're going to use this two levels of resistance, a high here in the market also. And then the next level I do want to point out to you guys very quickly is going to be this level, but we're not going to use it. But you can see there we had a rejection from it. And then we're going to point out this level here that was an obvious rejection. And then I want to point out this levels over here. Here we had support, it got broken, it became resistance, we had an equal high, market broke above that resistance, and it became support. And again, we see this price action develop here as well. This is how easy it is to read the price. So you're basically getting two lessons. I'm not gonna say for the price of one because I don't get paid for this, right? You guys will not believe, but I don't get paid for this because there's not enough views. Well, the channel doesn't get enough views in order for me to get paid through YouTube revenue. So I don't get paid. So I can't say you get exactly what you paid for, or you get two for the price of one, because there's nothing. That is why I ask people always just to like the video, so that the video can be recommended to more people, so that so that the view count can pick up. Which I do think it is the minimum to ask from you guys. That really will help the channel, because I do I do want to grow the channel. Obviously want to get a video editor. That's going to cost money, just to get more videos out. Not more videos out, but to get these videos looking fancy as well. But I can only do that with your guys' help, just like you rely on my help to make sure that I provide you with the best content out there, which is what I strive to do all the time. So let's continue, my good friends, and then we are going to talk about this level of support. Let's see if we got a support here to the left. I'm not going to use this, but you could have most likely seen this coming here as well. In fact, we can go all the way back. Now, this is a exercise, right? This is not for Yella. This is for you guys that wants to systematically understand this approach. You want to understand how it works. Some of you are going to go straight into the market now, and you're going to just want to apply it once we are done here. And some people are going to say, you know what, I'm going to take this, let me apply it, let me understand it first, and then I will go test it on a demo. Other people will just go, I'm going to deposit $10,000. I want to grow my account. Okay, so now that you've identified support and resistance levels, right, you're going to wait for the price to develop on the 5-minute time frame. Now I'm going to drop down on the 5-minute time frame, and what I am making a reference to when I say wait for prices to develop is that once you have a level of resistance that the market had traded upon. Now I'm going to use this example, and then we're going to go back. Let's say the market went up, it created resistance. It went up, it created resistance again, right? This is where you're going to be looking for that sells. But how do you look for sells? How do you go about that? So what you do is you drop down on the 50-minute time frame. Remember, when the market started to move to the upside, what did the market do? The market started to create and break structure to the upside, meaning that it created resistance, tested support, broke above resistance, tested support, broke above resistance, tested support, and then that's basically how this market were able to get up there. Remember, the market doesn't just go from hero to zero, like some people want to make it seem, right? It doesn't work like that. Even the market systematically, when the market goes up, as you can see over here, just to give you an example, if we go look at this market here, where it was so bullish here, okay, so you can see this market, it didn't just shot up straight. You can see there we had some red candles in between, and then we finally saw these red candles. And then if you go back further, you can see with this move down as well, we had some buyers that stepped into the market there, and that is why the market does not just shoot up like this. There is a systematic approach for the market to move up. Now we're going to use that same systematic approach, right? We're going to use the same principle to get into the market as well, but we need to wait for this market to start doing that, going down. So what you wait for is the market to create structure on the 5-minute time frame. Once there's a break of structure, that is when you get your entry into the market. Now where does your take profit go? It will go on the low of the support that the market, the previous support that the market had created, which I'll show you now. And the stop loss can always just go above the previous level of resistance. Some people will call it a stop hunt. I call it, that is how the risk works in the market, right? But the idea is to make sure that your stop loss is protected by structure. So if the market does decide to go up, we do expect a potential rejection from that level before any moves to the downside, right? Now the same can be said about a market that printed support. So we've got the market that printed support, the market hit that level. Now when the market came down to hit that level, we know the market printed support, broke below support, tested it as resistance, created new support, tested that as resistance, and that's how the market gone down. So how do we approach this market if we are looking for a buy? We wait for the price to develop to the upside the same way. What we then do is we get our entry into the market here as well, and we wait for the market to break, to create resistance, and then you can either set a sell limit or buy limit. Sorry, you can set a buy limit and wait for the price to hit your entry, and then boom, then the market will pull back. The market would have printed the resistance, broken above, hit it as support, and then that's basically where you get in. So the same concept that we use for the market to have gone down to create support, we're going to use the same concept to get into the market to take those buys. Okay guys, don't forget, once we 10k subs, we are so close. We need like 120 more subs, and I know all the people that are watching the video are not subscribed to the channel. I'm not sure why, but please make sure that you do sub to the channel. The 100k subs, oh my god, why am I talking about 100k? 10k subs guys, and then I will drop another super exciting video. Guys, please let me know if there is maybe reaction videos you want me to do. Maybe you've seen a video of someone doing a breakdown and you want me to do a reaction video of any person, of any trader. You want me to give my thoughts about that? Please let me know. I can go ahead and do that as well. Now let's go back to the market, right? So now that we've learned the concept, we understand what it is, right? So I'm gonna just we are on the 5-minute time frame, right? So again, if we were on the 15-minute time frame, we would have identified these levels in the market there, and we're going to use that levels because this is what we call back testing, right? Back testing to see if it works. But this back testing session is going to be so quick that you will probably not even see it. Okay, now the first thing that we need to understand that we have to wait for is for the market to create structure, right? So the market had broken below support over there. Okay, so the first thing that we can see is if we go slightly left, you can see how the market printed support, the market came back to print support, right? Now we've talked about the concept where the market prints a structure. Now the first thing that we can identify over here is that we have this structure of resistance that the market printed. There we have a green candle next to a red candle, right? Now we know that by definition, once the market breaks above the structure, remember this all happens on the 5-minute time frame, and we put out, we put our buy in there, and we look for the previous structure that the market had printed or the previous high. So for this scenario, we're going to go with that one over there. And where does the stop loss go? Like I always say, the stop loss just needs to go below this structure, because that level will protect our stop loss. And this is basically where you would put your stop loss, anywhere somewhere at this level. Basically what would have happened is the market would have then broken above the structure, went up, came down. Now you see how this are playing out the same way like it did from the high to the low. Here we can also identify multiple structures. Here we are a ranging market, but here we are a structure. Here a lot of structures created a break below the structure. Then you can see how the market continue to create and then break structure, and then, you know, come back, create structure, move down. So we apply the same concept for that move to the upside. So like I said, we are going to identify these levels. The next one we are going to take a look at over here is we are going to wait for the market to print structure. The most recent structure that was created is going to be at this level over here. We can see here we had support, resistance. That was resistance. The first level of structure, or the first structure reference, is to the left there. We wait for a break above that. With that candle, you can get in there again. I don't want to make it sound as if this is the perfect strategy or the way to trade, but this is just to give you guys an idea on what you have to do. The next up here, we can see this was a structure over there. So we are going to use that structure. Why? Because we got a red candle next to a green candle over there, and we also have this structure over here. So we've got multiple structures that we can go with. So we can go with all of this over here. We can wait for that breakout below there. Unfortunately, we had no retest. Here we are going to go also with the breaker structure. So here we have structure, and obviously when the market broke below that, you could have used that structure. Also, we would have used this previous level of support. You would have got into the market there. That would have been your take profit. Stop loss just needs to go anywhere above there. A 1 to 2 risk to reward is always a good way to get into the market as well. And then further we go, we also have this level that I identified earlier, which was support. We got the break below that. There was resistance, but we are not going to talk about that. Now we're going to come to this double bottom, like people will call it. Let me just clear the charts very quickly and then go on to the 50-minute time frame, and we're going to talk about this level over here and then just point that out. So we're going to go down on the 5-minute time frame very quickly just to show you guys something here. So this is obviously the level that we do want to monitor. Now we need to identify any structure that was created to the left, right? This structure was created, but as we obviously waited for price to develop, the market printed new structure there. So you could have used this structure because this is acting as a level of resistance, and you could have just waited for that break above that. You could have entered there. Here we would have gotten also a break above that. That would have been a good entry there. Here we also have structure that got broken as well. So the important thing is, and here you can see is another good example of structure being broken, and these are how you basically scalp gold up and down, especially when it starts to range. Okay, now guys, that is the simplest way that I normally trade, and I do apply this like on the Nasdaq, sometimes on the Dow Jones. So please give it a try. But before you give it a try, make sure that you understand exactly what it is that I said. That is it from my side. Thank you for your time. And as always, trade safe. Cheers for years.